We're news for business people.
Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs and I'll talk about the general trade setup. And the setup as of now looks rather muted for the equities because the SGX Nifty is indicating an absolute flat start as far as our market is concerned. But that's not the case as far as commodities are concerned. Remember, yesterday the US markets were shut and that is why, we're not having any kind of updates as far as the ADRs is concerned. Now, crude is the big talking point. It's gained for the 6th straight day. It closes about the $70 mark for after 3 years, and this is Brent that we are talking about. Even WTI has managed to rally. OPEC and the allies are trimming production given the fact that there is enough supply glut at this point of time, and that is keeping prices afloat. So that's something that's doing well. Metals as a pack on the LME did extremely well. Take a look at all the metals from aluminium, copper, zinc, nickel, lead and tin. All of them traded with a positive bias. Tin in fact was up, in fact the lead was up almost 2%, nickel was up over 1%. Most of them managed to do well. As far as Shanghai is concerned, zinc and aluminium have opened negative. Aluminium is trading down by almost 2%. So traction not going China's way as far as some of the metals are concerned, but steel, rubber, copper, they are doing well in trade in China currently. As far as gold is concerned, gold is trading with a positive bias for the 5th straight session. So there is enough traction that's happening at this point of time. Flows, FIs were net buyers, DIs were net sellers to the tune of 170 crores. FIs bought in almost 1600 crores this month. DIs have bought in almost 1300 crores this month. As far as the markets are concerned, the Nifty managed to outperform the broader index yesterday. So Nifty was up, trading closing at record high. So that was the big talking point yesterday. What did well? The Nifty Bank Index was the big outperformer. It actually outperformed the Nifty even. Autos as a pack is not doing well, be it Maruti or Tata Motors. The auto index was down almost 1%. Nifty was up 60%, and what led the rally? HDFC alone contributing almost 45 points out of it. So 3/4 of the gains on the Nifty was only on account of HDFC. And HDFC now yesterday hit the market cap of 3 lakh crore. Became the 5th most valuable company in India as far as market cap is concerned. ICICI, because of the Morgan Stanley inclusion in the portfolio, that did well. HDFC Bank on the back of movement on HDFC gained. Kotak also gained in trade. What didn't do well? TCS, Maruti, ONGC and IndusInd Bank didn't do well. But Agam, what are the FNOQs indicating?
Well, FNOQs are indicating that markets are at precarious levels. All said and done, we're not sure whether or not this rally is going to stop anytime soon, considering the kind of cues that we are looking at, because we are seeing fresh longs in the Nifty futures and the Bank Nifty futures even more so, because in the Nifty Bank futures we've seen about near 18% added in open interest towards longs. The WIX, however, has also moved up by as much as nearly 4%, above 14.3. But that said, when it comes to the Nifty put call ratio, that's at around 1.78, again at multi-year highs at precarious levels. But with respect to what we see in terms of changes in open interest, again more writing coming along around 10,700, which has shifted from 10,600 last week. We have two stocks which enter the FNO band. First one is Capital First, and the other one is IFCI. And of course, we're also keeping an eye on HDFC, which had such a sharp up move yesterday. And we saw near 20% added in open interest. Similarly, PC Jeweler is the other stock that also did substantially well and added a lot in terms of open interest. But that said, there is another commodity which is also on the rise, and that's oil prices. Oil prices have scaled a 3-year high after Brent crude closed well above $70 a barrel. And we have Bloomberg Networks, Ben Sharples for more on this. Ben, what do you have for us?
Hi, yeah, look, the prices are obviously hit that 3-year high, closing above $70 for the first time in 3 years. December 2014 was the last time we saw that period, that level. At the moment, there is some banks showing some concerns about whether the output cuts will continue through the end of December, but we have the producers like Iraq, Oman, Qatar, UAE all holding their resolve, saying that these cuts are going to go through through the end of the year. At the end of this week, we have have the IEA data. We also have OPEC monthly reports, and that'll give a better idea on compliance and where the market is at the moment. So, but at this point in time, the group is holding its resolve and saying that we need to go through to the end of the year.
At what point do they worry about U.S. production? I mean, we have a chart here, G#BTV6724, Ben, where we did see rig counts actually rise the most in 6 months now, after we have seen week after week of stockpiles falling in the U.S. I know there's not an immediate correlation here, but is that a good indication that perhaps things could start picking up?
Well, the market will probably look for trends. A pickup of 10 rigs in a week, the most in 6 months, like you say, would be a bit of a concern for the market, but it wouldn't be a surprise either, given prices are up at these levels. US supply hasn't reacted as quickly as many have forecast or expected. There is talk that it'll climb to 10 million barrels a day next month, which will be a record. But if it maintains that, then yeah, sure, there'll be concern for the market, especially if prices hang around these levels at the moment. But you know, the problem for OPEC is if they pull out of this deal early, then prices are just going to reverse. You're going to see that supply going back onto the market, and you know, all the hard work will be undone.
Stock of the day is Delta Corp. Fantastic set of numbers reported by the company. If you look at the revenue, top line growth is almost a 56% year-on-year jump that we're looking at, which is a multi-quarter high number at a number of around 162 crore as compared to 104 crore that we've seen in the corresponding quarter. In terms of net profit, we have seen almost a more than fourfold jump at a number of 45 crore as compared to 10 odd crore in the corresponding quarter. Operational performance too has been good for the company. Well, it has been a twofold jump there at a number of 69 crore as compared to 32 crore that we've seen in Q3 of the previous year. Margins have shot up as much as 43% as compared to 31% that we've seen in the corresponding quarter. So what goes behind the making of the number will be your corporate higher sales, which have been aided by the online business, which have started contributing in this quarter. If you see the revenue from casino business, that has also gone up by 75% on year-on-year basis, which is a good jump that we're looking at. And also the cost optimization measures undertaken by the company, be it in terms of the raw material cost or the employee expenses, that has aided well and has shown in terms of the operational performance of the company. Now this combined with your higher other income and low finance cost has percolated down well in the bottom line of the company. If you look at the other income, that's almost a seven-fold jump that we're looking at a number of around 1.08 crore. Finance cost has come down significantly for this company by 95% on year-on-year basis to a number of around 34 lakhs. If you look at the revenue breakup, that you'd see casino business contributes to around 75% of your overall revenue. Online gaming business stands at 14%, while hospitality contributes to a minuscule 11%. But if you look at the operational performance, it's the same order that we're looking at. You would see casino business contributes as a major contributor at 90%, online business is at 18.8%, and hospitality, which is now at an operational loss of 9 odd crore. But then do bear in mind the fact that the losses for this particular division on year-on-year basis have narrowed down. To just give you a rundown of what Delta Corp is, well, it's the only listed pick in the casino online gaming industry, and the market capitalization for this company is around 8,500 crore. Ace investor Rakesh Jhunjhunwala holds around 8.5% stake in this company. With that, let's toss it over to Saloni for Rupee market updates.
Thanks for that, Nikki. So talking about Rupee, it was tracking gains in the Asian currencies market and it surged over 14 paise to end at a fresh one-week high of 63.49 levels against the dollar. Now a record rally in the local equities market along with global dollar weakness largely supported the Rupee's big move. Also, Rohan Mathur, who is an FX trader at UCO Bank, believes that better than expected industrial production growth points to improving economic health, which thereby augurs well for foreign inflows, and eventually it will be supportive for bonds and Rupee in the near term. While on the flip side, Emirates NBD, which is one of the largest banking groups in the Middle East, believes expects Rupee to fall to 65 a dollar by March end 2018. Now on the global front, dollar continues to trade weaker against other major currencies despite thin trading yesterday on account of US holiday. While the euro gained as much as 0.8% yesterday, just few pips away from the crucial 1.23 mark, its strongest level in over 3 years, on speculation that central bank is all ready to reduce its stimulus program. While joining hands with euro, the sterling also pushed higher against the dollar. It rose as much as 0.6%, very close to 1.38 mark. It gained the most since Brexit vote in June 2016. Well, coming back home, dollar rupee is trading flat in the non-deliverable forward market, which indicates a flat opening for Indian rupee in today's trade. Well, moving on to bond market, sovereign bonds gained yesterday, while the yields ended steady at 7.44%. And lastly, global funds reduced their rupee debt holdings yesterday after infusing for 5 consecutive sessions. They reduced their debt portfolio by approximately 900 crore. Well, that said, let's shift focus to commodities market. Good morning, Jayesh. Oil prices continue to hover around 3-year highs. What's your take on it?
Morning, Saloni. So oil prices actually, Brent oil closed above the 70 per barrel mark for the first time in 3 years, and it has now rallied for about 6 days in a row. The US hedge funds have increased their bullish bets to the highest level that we've seen in more than a decade. But a word of caution coming in from Citigroup, SocGen and JP Morgan, who have been predicting that OPEC may be winding down the supply curbs that they had imposed. As far as precious metals are concerned, gold rallied to a 4-month high on the back of the slump that we are seeing in the dollar index. So COMEX gold was up 4 days in a row and is now trading close to the 1340 mark. COMEX silver also gained more than 1% each for each of the last 2 days. Now this was back on the dollar index, which actually traded below the 91 level for 3 days running now. It was a strong close by most of the base metals on the London Metal Exchange, once again backed by the slump in the dollar. The index itself gained about 1%, was up 4 days in a row. Lead, which was the best performer, surged as much as 2%. Copper, zinc and nickel gained more than 1% each. In fact, copper jumped to the most in over 2 months, and zinc hit a fresh decade high. Tin, which was up marginally about 0.5%, hit the highest level that we saw in about 3 months. However, similar action cannot be seen on the Shanghai Futures Exchange, where most of these base metals have opened on a mixed note. So copper and steel have opened with a positive bias, while zinc and aluminium have seen a decline. Aluminium as much as 2% on the downside.
Well, amongst the stocks that we're tracking today is Federal Bank after it reported its earnings post-market hours yesterday. The numbers broadly were in line with estimates, but we did see a small rise in the gross NPA on a sequential basis. So net interest income grew by 20%, net profit grew by 26%, while gross NPAs went up from 2.39% to 2.52%. We also had India Grid Trust. Now it's a mixed bag for that company. Revenues fell by 4%. But net profit grew by 13%. We saw a strong set of numbers as far as Z-Learn is concerned. If you look at the revenue growth, it came in at 73%, while net profit grew multi-fold to 7.7 crores, of course, on a lower base. If you look at the EBITDA numbers for the company, it came in about 89% higher, and the net profit also jumped about 300 basis points to 34.6%. So we could see some positive reaction there. We also have an ET report which says that Blackstone is in talks to buy commercial property portfolio from L&T for as much as 2,300 crores. So keep an eye out on that name. Bajaj Finance has updated on its MobiKwik acquisition, which it had announced in August. They've said that now they will hold 12.6% stake on a fully diluted basis post the conversion of compulsorily cumulative convertible preference shares, as compared to 10.83% that they had announced during the acquisition, and this is on account of the change in the price of the cumulative preference shares. So keep an eye out on that name. Another interesting name is BSE. They have announced a buyback of up to 15 lakh shares at the price of 1100 per share. So let's see how that name reacts in trade today. That apart, we're also tracking Vascon Engineering. Now, the company has said that 85% of its units of the new residential project Forest Edge have been sold on day one itself. We could see some positive reaction on that name. Max Ventures, where the board has approved raising up to 450 crores via rights issue. We're also tracking Bharat Bijli, where the company said they will get 47 crores from MIDC, and this is towards the acquisition of land in Navi Mumbai. That apart, we're also looking at BL Kashyap, where Standard Chartered Bank has approved one-time settlement scheme, so we could see some positive reaction on this name. And on the back of bulk deals, we have Astra Microwave, where investor Dilip Kumar Lucky bought 1% stake in the company yesterday. The stock already reacted, but we could see some incremental positive reaction today. And you also have Poddar Housing, where you have value Quest India Moat Fund, which sold 1.4% stake. So you could actually see a negative reaction on that one.
The second IPO of 2018 open stood, and it's Newgen Software, which is looking to raise as much as 425 crore rupees at a price band of 240-245. Now, at the upper end of the price band is 245. The market capitalization of the company would be close to 1700 crore rupees. Now, the IPO is a combination of offer for sale and a fresh issue. Now, in the offer for sale, the 4 private equity investors are almost exiting from the company by making handsome gains. Now, IDG, VI, Ascent and Pandora will make around 2.7 times its investment in the company, while SAP5 will make around 5 times its investment in the company. Now, there is also a fresh issue of 95 crore rupees, of which 84 crore rupees will be used by the company to purchase and furnish the new office, and the remaining 1100 crore rupees will be used for general purpose. Now, the company is a software product company with over 450 customers in over 60 countries. Now, the company earns revenue from multiple streams, but it is the annuity-based product which contribute the most to the revenue. Now, the company generates around 25% from sale of products, 50% from annuity-based products, and from 25% from sale of service as of the first half of financial year 2018. Now, if you see segment-wise, it is the banking sector which contributes around 48% to the company's revenue. 12% comes in from government PSU entities, while the remaining comes from BPO, insurance, healthcare, and other sectors. Now, if you see the company's financials and peer comparison, the company's revenue and net profit grew at a compounded annual growth rate of 17.7% and 6.3% over FY15 to FY17. Now, Newgen reported a low single-digit bottom-line growth number because the operating margins of the company are not stable. On the other hand, Intellect's revenue grew at a CAGR of 22.5%, but the company was posting losses on the bottom line over FY15 to FY17. Now, if you see the balance sheet of the company's Newgen's net worth was around close to 272 crore rupees, and its debt to equity was at par with Intellect at 0.6 times. On the return ratio side, Newgen's return ratios were better than that of Intellect. The return on equity was 4.3, return on capital employed was 5.2, and return on asset was 2.5, better than Intellect. Now, on the valuation side, at the upper end of the price band, that is 245, Newgen's shares are expensive when compared to its peer, that is Intellect. The price to earnings stands at around 145 times, while price to book at 6.2 times. It is expensive when you see the ratios of Intellect, that is around 119 times and 2.9 times. Lastly, on the brokerages remain divided on the issue. Angel Broking has a neutral rating on this IPO because they believe that the valuations are expensive compared to its peers, and its past financial records do not provide any confidence of the growth which we can expect from the company going forward. While Emkay Global has a subscribe rating on this IPO because they believe that the company has a strong business positioning and would be able to achieve the high revenue growth traction going forward.
There seems to be clear demand coming to the rural sector. And therefore I'm seeing a lot more positivity in Q3 than what I've seen from some time back. So when you do GDP for Q3, maybe when the numbers come, and often we have sat here and said something which has been wrong, but it will be better than Q2 is what I feel. So first and foremost. But what will it be? Will it be instead of 6.57? And what is the potential that we can get, and what do we need to leapfrog ourselves from to a robust growing economy? What about irrigation? We had 2 decent rainfalls, we still survived. Irrigation is improved, but is it at a place where it should be? Getting more water conservation in, whether in terms of drip irrigation or anything, even at the lower level, how do we continue?
All government expenditure you're talking about.
All government expenditure, but let them focus on productive assets.
Capacity utilization today improved, majorly driven by many of the sectors by exports. Exports are picking up.
Okay.
Domestic demand side, if you ask me, is it really improved substantially relative to what it was? There is some improvement. But that robustness which is required, bringing back confidence into private sector investments, I think it will take some more time. So if you take any of the core sectors of the economy, there is surplus. That surplus is to be absorbed, and confidence has to come to bring back the more and more investments. That is what government has to do.
When you talk about large amount of giveaways already happened, we're talking about across the board. Now, a giveaway to a low tax paying company and a giveaway to a large tax paying company is very different, as you can sense. The government needs to do possibly something out of the box if they want to augment tax revenue, because the traditional revenues are getting squeezed dry. The tax administration has not got any easy. The mood seems to be, and the compulsion seems to be, tax the guys who can afford, let the traffic bear. So I'm of the opinion that I'll have to be prepared that he will not reduce the taxes. He will not tinker with MAT. I fear he may even look at the stock market earnings. With the demonetization, the slump in reality, the gold prices being static. Of course, the oil prices have run up now, so maybe the gold will run up, I wouldn't know. But the asset class have turned to financial assets.
Right.
And they're all invested in the market. And invested in the market for quite some time to come, is my belief. So they're going to generate long-term capital gain. I think you would be looking at that space with a lot of interest.
Among other stocks to watch, backed by the delivery volume as of yesterday. First up, we have HDFC. The stock was up more than 6% yesterday and saw delivery buying in excess of 950 crores. The delivery volume more than doubled at about 54 lakh shares as compared to its 5-day average, and the total volume surged as much as 3% at nearly 1.1 crore shares as compared to its 5-day average. ICICI Bank, the other stock to watch out for, it was up nearly 4% and saw delivery buying in excess of 500 crores. The delivery volume was up 110% at 1.6 crore shares versus the 5-day average, and the total volume surged about 130% at more than 3 crore shares as compared to its 5-day average. Last and final stock to watch out for, IDFC Bank. It was down nearly 5% in trade, saw delivery selling of nearly 200 crores. Delivery volume surged as much as 82% at nearly 3 crore shares as compared to its 5-day average, and the total volume just about doubled at about 10.5 crore shares as compared to its 5-day average.
On the big brokerage calls for the day, first we have is JM Financials on Cochin Shipyard. Now they have initiated coverage on the stock with a buy rating and a target price of 700. Now they're saying that Cochin Shipyard is a strong player in the Indian shipyard industry, and its large dock size and strategic location places the company in a sweet spot. Now, Cochin Shipyard has been investing in capacity and capability to pave way for the next leg of growth. Now, going forward, favorable government policies would enable a sustained order flow for the company, and along with that, it will be defense, inland waterways, and oil and gas sector, which will offer the next leg of growth. Now, Cochin Shipyard's robust order book provides a revenue visibility for the next 7 to 8 years, and the brokerage is expecting the order inflow momentum to sustain as Navy orders jump 3 times over the next decade. Now, the company is also expected to remain debt-free on the back of its healthy free cash flow and negative working capital, and the company's revenue and EBITDA is expected to grow at a compounded annual growth rate of 18% over FY17 to FY20. Second, we have is UBS on Reliance Industries. Now, they have initiated coverage on the stock with a sell rating and a target price of 870. Now, Reliance Industries EBITDA would expand, but deleveraging would be delayed according to the brokerage. The brokerage is expecting the debt reduction to be back-ended due to additional capital expenditure on the telecom sector, telecom business, and on the upstream business. Now, they're saying that the refinery and petchem integration would boost the returns and reduce the cyclicality, but the stabilization of the same would still take time. On the GRMs, at its gross refining margin, they're expected to remain on the upward growth trajectory, boosted by the petcoke gasification benefits, and on the petchem business, the brokerage is expecting the EBITDA to almost double over FY17 to FY20 due to capacity expansion and cost benefit from integration, and they're expecting the volumes of petchem to grow at a CAGR of around 8% over FY17 to FY22. On the telecom business, the brokerage says that the Jio's market share would expand, but ARPU, that is average revenue per user, would remain low due to prolonged market share competition in the sector. Overall, they're expecting the company's EBITDA and EPS to grow at a CAGR of around 19% and 14% over FY17 to FY22. Lastly, it says that the current share price of Reliance Industries factors in all the benefits from the refining and the petchem business.
Now, India's trade deficit widened to $14.9 billion from $13.8 billion in November. Rising exports were offset by a surge in the import of gold, jewelry, and a jump in crude oil prices. The trade deficit stood a little over 41% higher than the same period last year. Merchandise exports for December rose over 12% from a year ago to $27 billion. Goods imports came in at nearly $42 billion for December. This is a gain of 21% from a year ago. Now, as the government looks to allay privacy and security concerns with the Aadhaar, the UIDAI has said that the program could come equipped with facial recognition by July this year. The UIDAI hopes that this new feature will help senior citizens
who find it difficult with fingerprint authentication. However, they have said that face recognition will be used to authenticate Aadhaar only if it is combined with existing authentication methods like iris scans or fingerprints. The new method will also be allowed on a need basis, is what they've said. This is the third layer of security that the UIDAI plans to add to the Aadhaar program, and that's after reports of breaches and leaks in the system created quite a stir. Now, here are a few stories that you should consider reading on the website bloombergquint.com. First up, India's Power Ministry is considering ending the lock on electricity sales by distributors as one way to speed up growth in vehicle charging stations. That's according to a ministry official with knowledge of the plan. Second, China is escalating its clampdown on cryptocurrency trading, targeting online platforms and mobile applications that offer exchange-like services, according to people familiar with the matter. That's a Bloomberg story. Let's now listen in to Jay Thakkar of Anand Rathi on whether the bank Nifty has still more upside left for it.
You can say from the day of Gujarat election results or prior to that they have been performing, but Bank Nifty has been one sector which was clearly since past couple of series, FNO series I would say, was unable to take off 25,826,000 zone. Now since it has taken off, I would not like to give up. I would say that since it has done so, then let's continue to ride the momentum. If it fails, then it's okay. On the lower side, I would say 25,600, 700 should be the ideal stop loss if it happens. So there's always a stop loss. But if this turns out to be a real breakout, and as we have been anticipating, then yes, a strong move on the upside can be missed by the traders. So I think shouldn't take a chance, and the risk reward is also favorable on the side of the bulls, I would say. Hence, taking a risk is quite prudent, I would say, at these levels. And yes, 25,700, I think that should be the ideal stop loss, because 25,800 was the breakout level, so 100 points below that. So I would say with that as a stop loss, continue to ride this. And among which I've already recommended Kotak Bank. I think that's one stock. ICICI Bank is the one stock which I had recommended yesterday, and I think I would say in the last trading session. And along with this, I think now there should be some move in PSU names as well. I think PSU names have not participated at all in this rally, so there should be some move out there.
That's all you need to know. This is Bloomberg Quint.